Given the bullish price forecast for Bitcoin over the next few weeks, the strategy suggests a long position. This means buying Bitcoin with the expectation that its price will increase. The entry price should be set at $90,400, a level slightly below the current price but above recent support. This allows for a potential margin of safety while still capturing potential upside. The stop loss should be placed at $89,800, just below the recent price dip, to protect against unexpected downward movements. The target price should be set at $94,500, the first predicted price target in the forecast. This provides a reasonable profit target while aligning with the bullish outlook. This strategy aims for a medium-term investment horizon, capitalizing on the anticipated price increase within the next few weeks. Given the price trends and forecast for Ethereum, a moderately aggressive investment strategy would focus on a short to medium-term approach. The historical prices show a recent downward trend, but the forecast indicates a potential upward correction. The current price is near the support level of $2,961.23, suggesting a possible buying opportunity. The resistance is at $3,206.02, indicating a potential ceiling for the upward movement. Therefore, a long position is advisable to capitalize on the potential for a price increase towards the resistance level. An entry price of $3,080 would be ideal, aligning with the recent price action and providing a buffer below the support level. The stop loss should be set at $3,000 to protect against further downside movement. The target price should be set at $3,180, aiming to capture a significant portion of the forecasted upward movement. This strategy balances risk and reward, allowing for potential gains while mitigating potential losses. Given the price trends and forecast for Ripple, an investment strategy focusing on a short-term approach seems appropriate. The historical prices show an upward trajectory, with the current price hovering near the forecast and the support level of $0.8972. The resistance is at $1.119, indicating potential for further upward movement. In this scenario, a long position is advisable to capitalize on the anticipated price increase towards the resistance level. For this strategy, an entry price of $1.06, aligned with the current price and the forecast, would be suitable. A stop loss at $1.04 would protect against unexpected price drops. The target price should be set at $1.11, slightly below the resistance level, allowing for profit-taking before a potential pullback. This strategy leverages the short-term bullish momentum indicated by the price data and forecast, aiming to capture gains within a relatively short time frame. Based on the historical price data and the provided forecast for Solana, an aggressive investment strategy suggests a long-term approach. The historical prices demonstrate a generally upward trend, with recent fluctuations around the support and resistance levels. The forecast indicates continued growth, suggesting that Solana could reach prices above its current resistance level. Therefore, a long position is recommended for a long-term investment strategy. The entry price should be around $235, aligning with the current price near the support level. A stop loss can be placed at $222.1, the identified support price, to limit potential losses. The target price should be set at $264, aiming to capitalize on the forecasted price increase and reach a significant profit level. This strategy capitalizes on the positive price trends and forecast, aiming for long-term growth in the value of Solana. Given the provided historical price data and forecast for Cardano, a medium-term investment strategy appears to be the most suitable approach. The historical price data demonstrates a clear upward trend, with the price consistently rising over the past few weeks. The forecast further strengthens this bullish outlook, projecting continued price growth in the coming weeks. Therefore, a long position in Cardano is recommended. A suitable entry price would be around 75 cents, aligning with the current price and the support level. The stop-loss order should be placed at $0.732, slightly below the recent low, to minimize potential losses. The target price can be set at $0.8985, the resistance level, aiming to capitalize on the anticipated price increase. This medium-term strategy allows for potential profits while mitigating risk through a well-defined stop-loss order. Coin presents a compelling investment opportunity with its recent price history and forecast. The historical data shows a strong upward trend, with the price consistently making higher highs and higher lows. This positive momentum is further supported by the forecast, which predicts continued price growth over the next week. The support price of $3.3508 provides a solid foundation for potential buying opportunities, while the resistance price of $3.7846 presents a target for potential profit-taking. Given this analysis, a long-term investment strategy in Coin appears favorable. An entry point around $3.55, slightly above the current price and below the resistance level, would allow for a comfortable margin of safety. The stop-loss could be set at $3.35, protecting against any unexpected downward price movement. The target price could be set at $3.80, aiming to capture a significant portion of the anticipated price appreciation. This strategy capitalizes on the bullish sentiment surrounding Coin while mitigating risk through a well-defined stop-loss order. Based on the Filecoin price information provided, a medium-term investment strategy appears most suitable. The historical price data reveals a volatile trend with fluctuations above and below the resistance level of $4.415. However, the forecast price suggests a gradual upward movement, indicating potential for growth in the medium term. Therefore, an investment strategy focused on a long position is recommended. A suitable entry price would be around $4.25, slightly below the current price and above the support level of $4.206. This allows for a margin of safety while capturing potential upside. The stop-loss should be placed at $4.15, safeguarding against significant price drops. The target price could be set at $4.55, aligning with the forecast and aiming for a reasonable profit margin. This strategy balances risk and reward, capitalizing on the potential for Filecoin's price to appreciate in the medium term. Given the historical price data and the forecast for Theta network, a medium-term investment strategy appears most suitable. The historical prices show a general upward trend, with recent fluctuations indicating potential volatility. The forecast suggests continued growth, reaching prices above the current resistance level. This suggests a bullish outlook for Theta network in the medium term. A long position would be advisable, with an entry price around $1.68, aligning with the forecast and offering a potential entry point before the price potentially surges. The stop-loss should be set at $1.55, below the recent support price, to mitigate risk in case of an unexpected price decline. The target price could be set at $1.75, aiming to capture a significant portion of the anticipated price increase while staying below the projected resistance level. This strategy allows for potential gains while managing risk effectively within a medium-term investment horizon. Given the historical price data and the forecast for Dogwifhat, a short-term investment strategy appears to be the most suitable. The historical prices demonstrate a volatile trend, with fluctuations both upwards and downwards. The forecast suggests a slight decline in the coming week, aligning with the recent downward movement in the price. Therefore, a short position on Dogwifhat is recommended. An entry price of $3.35, slightly above the current price, would allow for a small margin of safety. The stop-loss should be placed at $3.45, protecting against any unexpected upward movement. The target price could be set at $3.10, taking advantage of the potential for a decline towards the support level. This strategy aims to capitalize on the short-term bearish momentum while mitigating risk through a well-defined stop-loss. Based on the provided price history and forecast for Stellar, a medium-term investment strategy appears most suitable. The historical data shows a clear upward trend, with the price experiencing significant growth periods followed by brief consolidations. The forecast predicts continued growth, reaching $0.276 in the coming weeks. This suggests a positive outlook for Stellar in the medium term. Therefore, an investment strategy for Stellar should involve a long position. A suitable entry price would be around $0.235, allowing you to buy in near the current price while still benefiting from the potential upside. The stop loss should be set at $0.225 to minimize potential losses if the price reverses unexpectedly. The target price could be set at 27 cents, aligning with the forecast and offering a healthy profit margin. This strategy balances risk and reward, aiming to capitalize on the positive momentum of Stellar over the next few weeks. Based on the provided price information for Starknet, a medium-term investment strategy appears most suitable. The historical price data exhibits a fluctuating trend with both upward and downward movements. While the forecast suggests a slight upward movement in the coming week, the historical volatility indicates potential for fluctuations within this range. Therefore, a long position is recommended, aiming to capitalize on the potential upward price movement. A suitable entry price would be around 46 cents, aligning with the current price and the support level of $0.4461. To manage risk, a stop-loss order should be placed at 44 cents, slightly below the support level. This would limit potential losses if the price unexpectedly drops. The target price for this investment could be set at 51 cents, aligning with the resistance level of $0.5058 and allowing for a reasonable profit margin. This medium-term approach allows for potential gains while mitigating risk through a well-defined stop-loss order. Based on the provided information about PENDLE, a cautious investment strategy with a medium-term perspective appears most suitable. The recent 2-week price change shows some volatility, but the forecast suggests a slight downward trend. While the support price at $4.347 acts as a potential floor, the resistance at $4.928 indicates that significant upward movement might be challenging in the near future. Considering this, a long position is not recommended at this time due to the potential for further price declines. A short position, however, could be considered with an entry price around $5.20, aligning with the current price and the downward forecast trend. The stop loss should be set at $5.38, slightly above the highest recent price, to minimize potential losses. The target price could be set at $4.70, aiming to capitalize on the potential price drop towards the support level. This strategy allows for a moderate risk-reward ratio while taking advantage of the predicted short-term price movement. Based on the provided information for Render, a short-term investment strategy appears most suitable. The recent price history shows a consistent upward trend, with the current price hovering near its forecast and the support price. This suggests potential for further price increases in the short term. Therefore, a long position is recommended to capitalize on this upward momentum. An ideal entry price would be around $7.03, aligning with the current market price and recent price action. A stop loss could be set at $6.678, the support price, to limit potential losses. The target price should be set at $7.878, the resistance price, aiming to capture a significant portion of the potential price increase. This strategy allows for participation in the anticipated short-term rally while managing risk effectively. VeChain shows a generally upward trend over the past 2 weeks, with a recent surge past the 3 cents resistance level. The forecast predicts continued growth, reaching up to $0.0349 in the coming week. Considering this positive outlook and the price history, a long position appears to be the most suitable strategy. To implement this strategy, an entry price of $0.0325 could be considered, slightly below the current price to allow for potential price correction. The stop loss should be set at $0.0315 to minimize risk and protect against a sudden price drop. The target price could be set at $0.0348, aligning with the highest forecast price, allowing for significant profit potential. This strategy capitalizes on the bullish momentum and aims to maximize returns within a short to medium-term timeframe. Based on the provided Binance Coin price information, a cautious investment strategy with a medium-term perspective appears most suitable. The recent price history demonstrates volatility, with fluctuations both upward and downward. The forecast suggests a slight downward trend in the coming week, which aligns with the historical price movements. However, the support price at $599.06 provides a strong foundation, indicating potential for price recovery. Therefore, a long position could be considered, aiming to capitalize on a potential rebound. A conservative entry price around $615, slightly below the current price and above the support level, would allow for some downside protection. The stop loss should be set at $599.06, coinciding with the support price, to limit potential losses. The target price could be set at $626, aligning with a recent historical high and representing a moderate profit potential. This strategy balances risk and reward, allowing for potential gains while mitigating the risk associated with the predicted downward trend. Given the provided price information for Conflux, a cautious investment strategy is recommended. The 2-week price history shows volatility with both upward and downward movements, indicating a lack of clear directional momentum. The forecast price suggests a continued downward trend over the next week, aligning with the recent price decline. Considering these factors, a short position appears more suitable for the short term. An ideal entry price for this short position would be around $0.152, aligning with the current price and recent price action. A stop loss should be set at 16 cents, slightly above the current price, to protect against unexpected upward movements. The target price for this trade could be 14 cents, taking advantage of the forecasted decline while staying above the strong support level of $0.126. This strategy prioritizes risk management while aiming to capitalize on the anticipated price decrease. Given the provided information about Worldcoin, a short-term investment strategy appears to be the most suitable approach. The 2-week price change shows a slight upward trend, but the 1-week forecast suggests a consolidation phase with minor fluctuations. The support price at $1.999 indicates a potential floor for the price, while the resistance at $2.394 suggests that significant upward momentum might be limited. Considering these factors, a long position could be considered, aiming for a target price slightly above the resistance level at $2.40. However, to manage risk effectively, it's crucial to set a stop-loss order at a price below the support level, around $1.98. This would limit potential losses if the price unexpectedly drops. An entry price around $2.25, close to the current price and within the forecast range, would allow for a reasonable profit potential while minimizing risk. This strategy capitalizes on the potential for a short-term price increase while mitigating the downside risk associated with market volatility. Given the price trends and forecast for Avalanche, a medium-term investment strategy appears most suitable. The historical prices show a fluctuating pattern with an overall upward trend. The current price is hovering near the support level of $28.83, indicating a potential buying opportunity. The forecast suggests a steady upward movement towards $35, with prices expected to remain above the support level in the coming weeks. Therefore, a long position is recommended to capitalize on this potential price increase. An entry price of $30 could be considered, aligning with the current price range and providing a margin of safety. A stop loss at $28.83, the support level, would protect against unexpected downward movements. The target price could be set at $35, aligning with the forecast and representing a potential profit of $16.67%. This strategy allows for a balanced approach, taking advantage of the bullish outlook while managing risk effectively. Given the price history and forecast for Jupiter, a medium-term investment strategy appears most suitable. While the price has experienced some fluctuations, the overall trend suggests a potential for gradual upward movement. The forecast indicates prices will likely hover around the $1.16 to $1.19 range in the coming weeks. Considering this, a long position in Jupiter could be beneficial. An ideal entry point would be around $1.13, slightly below the current price and close to the recent support level. This allows for a margin of safety while still capturing potential upside. A stop-loss order could be placed at $1.07, protecting against significant price drops. The target price could be set at $1.19, aligning with the upper end of the forecast range and representing a reasonable profit target. This strategy aims to capitalize on the projected upward movement of Jupiter while managing risk through a well-defined stop-loss order. EOS exhibits an upward trend with a history of price fluctuations. Although the forecast predicts continued growth, the recent price consolidation near the support level suggests a potential pause or slight correction. Given this scenario, a cautious approach with a medium-term investment perspective appears appropriate. A long position could be initiated at the entry price of $0.623, aligning with the current price and the support level. The stop loss should be set at $0.5855, the support price, to minimize potential losses. The target price can be set at $0.679, the resistance price, aiming to capitalize on the predicted upward momentum. This strategy allows for a reasonable risk-reward ratio while acknowledging the potential for short-term volatility. Given the price trends and forecast for TRON, a medium-term investment strategy appears promising. The historical prices demonstrate an upward trajectory, and while recent fluctuations have occurred, the forecast suggests continued growth, reaching a high point near $0.202. This indicates a bullish outlook for TRON in the coming weeks. A long position would be advisable to capitalize on this potential price increase. To implement this strategy, an entry price of $0.195 aligns with the current price and the support level of $0.192. A stop loss should be set at $0.192 to limit potential losses if the price unexpectedly drops below support. The target price could be set at $0.202, aiming to capture the anticipated price peak. This approach allows for a balanced risk-reward profile, maximizing potential gains while minimizing downside exposure. Based on the provided SHIB price data, a medium-term investment strategy appears to be the most suitable approach. While the recent 2-week price history shows volatility, the forecast suggests a slight upward trend. The current price is hovering near the support level of $0.4589, indicating a potential buying opportunity. A long position could be considered, aiming to capitalize on the forecasted price increase towards the resistance level of $0.513. To implement this strategy, an entry price of $0.460 would be advisable, slightly above the current price and below the support level, providing a margin of safety. The stop loss should be set at $0.455, just below the support level, to minimize potential losses. The target price could be set at $0.505, aiming for a moderate profit before reaching the resistance level. This approach allows for potential gains while managing risk within a medium-term timeframe, capitalizing on the anticipated upward movement of SHIB. Based on the provided Shiba Inu data, a cautious investment strategy with a medium-term perspective appears most suitable. The historical price data shows some volatility, with recent fluctuations around the $2.4-$0.0000250 price range. The forecast indicates a slight upward trend, suggesting potential for growth in the coming week. However, the relatively close proximity of the support and resistance levels suggests limited room for substantial price movement in the short term. Therefore, a long position is recommended for a medium-term investment strategy. An entry price of $0.0000248 aligns with the current price and the forecast. The stop loss should be placed at $0.0000241, below the recent lows and providing a buffer against potential price drops. The target price is set at $0.0000260, aiming to capitalize on the forecasted upward momentum while staying within a reasonable risk-reward ratio. This strategy allows for potential profit while managing risk by limiting potential losses. Given the price trends and forecast for Dogecoin, an aggressive investment strategy would focus on a short-term approach to take advantage of the anticipated upward momentum. The historical prices show a consistent upward trajectory, with the current price near its forecast and close to the support level of $0.14435. The resistance is at $0.39085, indicating that there is still room for upward movement. In this scenario, a long position is advisable to capitalize on the potential for a price increase towards the resistance level. An entry price of $0.371, aligning with the current price, would be suitable. The stop loss should be set at $0.364 to protect against any unexpected price pullbacks. The target price should be set at $0.401, slightly above the first forecast price, allowing you to take profits before the market potentially encounters resistance. This strategy capitalizes on the bullish sentiment and short-term price forecast for Dogecoin. Given the price trends and forecast for Hooked Protocol, a cautious investment strategy would focus on a short-term approach to manage potential risks. The historical prices show a volatile trend with recent fluctuations. While the forecast suggests a slight upward movement in the coming week, it remains relatively close to the current price levels. The support price at $0.3632 indicates a potential floor for the price, while the resistance at $0.4236 suggests an upper limit for the short-term gains. Considering these factors, a long position is advisable for a short-term investment strategy. An entry price around $0.395 could be considered, aligning with the recent price action and providing some buffer below the support level. A stop loss at $0.385 would help mitigate potential losses if the price drops unexpectedly. The target price could be set at $0.415, aiming to capture a portion of the potential upward movement suggested by the forecast. This strategy allows for participation in the potential upside while managing risks through a defined stop loss and a conservative target price. Given the provided price history, forecast, and support/resistance levels for Aevo, a short-term investment strategy focusing on a long position appears to be the most suitable. The price history exhibits an upward trend, although with some fluctuations. The forecast predicts continued upward momentum, with prices expected to hover around $0.347 to $0.355 in the coming week. This aligns with the current price being near its support level of $0.319, suggesting potential for further growth. Therefore, a long position could be initiated at the current market price, with a stop loss placed slightly below the recent low of $0.328 to minimize risk. The target price could be set at $0.391, the highest forecasted price, allowing for potential profit-taking before the market potentially encounters resistance at $0.3357. This strategy capitalizes on the anticipated short-term upward movement of Aevo while managing risk through a well-defined stop-loss order. The price history of Coin shows a fluctuating trend with both upward and downward movements. Although the forecast suggests a slight decrease in price over the next week, the price is currently situated near the support price, indicating potential for a rebound. Considering the short-term outlook and the current price proximity to the support level, a long position seems more suitable. An ideal entry price for this strategy would be around $0.0070, slightly above the current price and below the resistance level. A stop-loss order could be set at $0.0066, the support price, to minimize potential losses. The target price should be set at $0.0078, aiming to capture a potential upward movement towards the resistance level. This strategy capitalizes on the potential for a price rebound while mitigating risk by setting a stop-loss order at the support level. Given the price trends and forecast for Coin, a medium-term investment strategy appears most suitable. The historical prices demonstrate an upward trend, but the recent price action shows some consolidation. The forecast suggests a slight increase in price over the next week, indicating potential for further growth. The support price at $0.01903 provides a safety net, while the resistance at $0.02005 presents a potential ceiling for the short term. Therefore, a long position is recommended to capitalize on the potential for price appreciation. An entry price around $0.0195 would allow you to buy at a price slightly above the support level, while the stop loss should be set at $0.0190 to minimize risk. The target price could be set at $0.0205, aiming to capture a portion of the potential upside before encountering resistance. This strategy allows for a balanced approach, taking advantage of the bullish sentiment while managing risk effectively. Given the price trends and forecast for Pepe, a medium-term investment strategy appears most suitable. The historical price data shows a period of consolidation followed by an upward movement, indicating potential for further growth. The forecast suggests a slight upward trend in the coming week, with prices potentially reaching around $0.000211. The support price at $0.000107 provides a safety net, while the resistance at $0.000232 represents an upside limit. For this strategy, a long position is recommended. An entry price of $0.000207, aligning with the current price and the forecast, would be appropriate. The stop loss should be set at $0.000197, slightly below the recent low point, to protect against unexpected price drops. The target price should be set at $0.000211, aiming to capitalize on the predicted price increase. This approach balances risk and reward, allowing you to participate in the potential upside of Pepe while mitigating potential losses. Based on the provided Toncoin price information, a medium-term investment strategy appears most suitable. The historical price data shows a fluctuating trend, with recent prices hovering around the $5.30 level. The forecast suggests a slight upward movement in the coming week, with prices potentially reaching the $5.40 range. This indicates a potential for modest gains in the short term. Considering this, a long position in Toncoin is recommended for a medium-term investment horizon. An entry price of $5.28, slightly below the current market price, would allow for some downside protection. A stop-loss order should be placed at $5.18 to limit potential losses if the price drops below the support level. The target price can be set at $5.57, aligning with the recent high and offering a reasonable profit margin. This strategy aims to capitalize on the anticipated upward movement while managing risk effectively. Given the price trends and forecast for Bitcoin Cash, a medium-term investment strategy appears most suitable. The historical prices show a fluctuating trend with both upward and downward movements. The current price is hovering near the support level of $379.90, suggesting a potential for a bounce back. The forecast indicates a gradual upward movement, with prices projected to reach around $460 in the coming weeks. Therefore, a long position is recommended to capitalize on this potential upward movement. An entry price of $420, slightly above the current price, would be ideal, allowing for some margin of safety. The stop loss should be set at $400 to limit potential losses if the price drops unexpectedly. The target price should be set at $460, aligning with the forecast and providing a reasonable profit margin. This medium-term strategy allows for potential gains while managing risk effectively. Based on the provided information for Chainlink, a medium-term investment strategy appears to be the most suitable. The historical price data shows a consistent upward trend, with recent fluctuations indicating consolidation rather than a significant reversal. The forecast price suggests continued upward momentum, with a projected increase towards the resistance level. This suggests a bullish outlook for Chainlink in the medium term. Therefore, an investment strategy for Chainlink should involve a long position. A suitable entry price would be around $14, aligning with the current price and recent support level. The stop loss should be set at $13.60, below the recent support level, to protect against unexpected price drops. The target price should be set at $15.30, aiming to capture potential gains towards the resistance level. This strategy allows for potential profit from the anticipated upward price movement while managing risk through a defined stop loss. Given the provided Polkadot price history and forecast, a medium-term investment strategy appears most suitable. The historical data shows a generally upward trend, with recent fluctuations. The forecast indicates continued upward movement, suggesting potential for growth in the coming weeks. A long position is recommended to capitalize on this anticipated growth. An ideal entry price would be around $5.40, slightly below the current price, allowing for some room for price adjustment before entering the trade. The stop loss should be set at $5.15, below the recent support level, to limit potential losses. The target price could be set at $6, aligning with the forecast's higher projections and offering a reasonable profit margin. This strategy balances risk and reward, aiming to capture the potential upside of Polkadot, while mitigating potential downside through a well-defined stop loss. Based on the provided near-protocol price information, a short-term investment strategy appears most suitable. The historical price data reveals a recent upward trend, with the price oscillating around the $5.50 mark. The forecast suggests continued upward momentum, with prices potentially reaching $5.87 within the next week. This indicates a bullish outlook in the short term. Considering this bullish outlook, a long position is recommended. An ideal entry price would be around $5.50, aligning with the current price and the support level. A stop-loss order should be placed slightly below the entry price, around $5.45, to minimize potential losses. The target price should be set at $5.85, aiming to capture a portion of the anticipated price increase. This strategy capitalizes on the short-term bullish momentum of near protocol, offering a potential for profit within a week. Given the price trends and forecast for stacks, a medium-term investment strategy focusing on a long position appears promising. The historical prices show a general upward trend, with recent fluctuations around the $1.80 mark. While the forecast suggests a slight dip in the short term, it predicts a gradual increase in price over the medium term. This indicates a potential for capital appreciation as the price moves towards the resistance level of $1.865. To implement this strategy, we can set an entry price around $1.81, capitalizing on the current price proximity to the support level of $1.674. A stop-loss order at $1.75 would protect against significant downside risk, while a target price of $2 would allow for a healthy profit margin as the price potentially reaches the resistance level. This medium-term approach allows for some price fluctuations while aiming for a consistent upward trend. Based on the provided price information for Aptos, a medium-term investment strategy appears most suitable. The historical price data shows a fluctuating trend with a slight upward bias. The forecast predicts a sustained price level around $12 for the next week, indicating a period of consolidation. Given this outlook, a long position would be advisable. A suitable entry price could be around $11.80, slightly above the support price of $11.74, allowing for a buffer against immediate price dips. The stop loss should be set at $11.50 to minimize potential losses if the price drops below the support level. The target price could be set at $12.50, aiming to capitalize on the potential upward movement towards the resistance level. This strategy balances risk and reward, allowing for potential profit while mitigating the downside risk. Given the price trends and forecast for Litecoin, an aggressive investment strategy would focus on a short-term approach. The historical prices show a consistent upward trajectory, with the current price close to its forecast and near the support level of $82.57. The resistance is at $95.97, indicating that there is still some room for upward movement. However, the forecast suggests a slight pullback in the coming week. In this scenario, a long position is advisable to capitalize on the potential for a price increase towards the resistance level. An ideal entry price for a short-term long position would be around $85, aligning with the forecast. The stop loss should be set at $82.57 to protect against a sudden drop below the support level. The target price should be set at $90, allowing you to take profits before the predicted pullback and ensuring you lock in gains while minimizing risk. This strategy aims to capitalize on the short-term upward momentum while mitigating potential losses with a well-defined stop-loss order. Given the price trends and forecast for Uniswap, an aggressive investment strategy would focus on a short-term approach to capitalize on the upward momentum. The historical prices show a consistent upward trajectory, with the current price near the forecast and near the support level of $8.146. The resistance is at $9.381, indicating that there is still room for upward movement. In this scenario, a long position is advisable to capitalize on the potential for a price increase towards the resistance level. Therefore, a suitable investment strategy for Uniswap would involve entering a long position at $9.09, the current price. The stop loss should be set at $8.62, the recent low point, to protect against any unexpected price decline. The target price should be set at $9.38, the resistance level, allowing you to take profits before a potential pullback. This strategy leverages the positive price forecast and historical upward trend while managing risk with a well-defined stop loss. Given the price trends and forecast for Bittensor, a cautious investment strategy would focus on a medium-term approach. The historical prices show a volatile trend with both upward and downward movements. The current price is near the support level of $420, indicating potential for a bounce back. However, the forecast suggests a continued downward trend over the next week, reaching as low as $464. This suggests a period of consolidation or sideways movement before a potential further decline. Therefore, a medium-term investment strategy with a short position is recommended. An entry price of $495, aligned with the current price and recent fluctuations, would be appropriate. The stop loss should be set at $517, the resistance price, to limit potential losses if the price unexpectedly moves upward. The target price could be set at $450, allowing for a potential profit if the forecast of a decline plays out. This strategy balances the risk of a short-term rebound with the potential for gains from the anticipated medium-term downward trend. Given the internet computer price trends and forecast, a medium-term investment strategy appears promising. The historical prices demonstrate a fluctuating trend, but the recent 2 weeks show a gradual upward movement. The forecast further suggests continued growth, with prices potentially reaching $9.33. This positive outlook, coupled with the support price at $7.999, indicates a favorable entry point for a long position. To implement this strategy, consider an entry price around $8.80, a stop loss at $8, and a target price of $9.40. This strategy allows for potential profit from the anticipated price increase while minimizing risk by setting a stop loss below the support level. Holding the position for a medium term, potentially 2 to 3 weeks, could allow you to capitalize on the forecasted price growth and potentially achieve a healthy return on investment. Based on the provided data for Artificial Superintelligence Alliance, a bearish investment strategy is recommended. The historical prices show a downward trend, and the forecast predicts further declines. The current price is hovering near the resistance level of $1.358, suggesting a potential for a pullback. The support price at $1.205 indicates a potential floor for the price, but the forecast suggests a dip below this level. Therefore, a short position is advised, aiming to profit from the anticipated price decline. An entry price of $1.34 would allow you to capitalize on the potential pullback from the resistance level. A stop loss should be set at $1.36 to minimize risk in case of an unexpected price surge. The target price could be set at $1.22, aiming to capture a significant portion of the forecasted decline while staying above the crucial support level. Based on the historical price data and the provided forecast for Optimism, a medium-term investment strategy appears most suitable. The historical prices demonstrate a fluctuating trend with both upward and downward movements. While the forecast suggests a slight upward trend, the volatility observed in the historical data indicates that significant price swings are possible. A medium-term approach allows us to capitalize on potential upward movements while mitigating the risk associated with short-term fluctuations. Considering the information provided, a long position in Optimism is recommended for a medium-term investment strategy. An entry price around $1.64, slightly below the current price, allows us to enter the market at a potentially attractive point. The stop loss should be set at $1.577, the support price, to limit potential losses. The target price can be set at $1.838, the resistance price, aiming to capture a significant portion of the potential upward movement. This strategy balances risk and reward, allowing for potential profits while safeguarding against substantial losses. Given the price trends and forecast for Ethereum Classic, a medium-term investment strategy appears to be the most suitable approach. The historical prices show a generally upward trajectory with some minor fluctuations, indicating potential for continued growth. The forecast also suggests a stable upward movement, with prices likely to hover around the $25 to $26 range over the next week. The support price of $24.33 provides a solid base for potential price recovery, while the resistance price of $27.15 presents a ceiling for immediate upward momentum. Therefore, a long position on Ethereum Classic is recommended for a medium-term investment strategy. An entry price around $25 would allow you to buy in near the current market price and capitalize on the anticipated upward movement. The stop loss should be set at $24.33, aligning with the support price, to protect against potential downside risks. The target price could be set at $27, aiming to capture a significant portion of the potential price appreciation before encountering resistance. This strategy balances risk and reward, allowing you to participate in the potential growth of Ethereum Classic while mitigating potential losses. The provided price data for Ethereum name service suggests a potential short-term investment opportunity. While the historical prices show some volatility, the forecast indicates a relatively stable price range around $18. The support price at $16.99 provides a solid floor, suggesting limited downside risk. However, the resistance price at $19.42 indicates a potential ceiling for upward movement in the near term. Therefore, a short-term long position in Ethereum name service could be considered. An entry price around $17.50 would allow for a potential profit target of $19.42, while a stop-loss order at $16.99 would limit potential losses. This strategy capitalizes on the anticipated stability of the price within the forecast range, aiming to profit from a potential upward movement towards the resistance level while mitigating risk with a defined stop-loss. Given the price trends and forecast for Solana name service, a cautious investment strategy would focus on a short-term approach. The historical prices show a downward trend over the past 2 weeks, with the forecast indicating further declines. The price is currently near its support level of $0.1798, suggesting that further downward movement is likely. The resistance level of $0.2149 is relatively far away, indicating a lack of strong upward momentum. Therefore, a short position is advisable to capitalize on the anticipated decline in prices. An entry price of $0.215 could be considered, aligning with the current price and allowing for potential profit if the forecast holds. The stop loss should be set at $0.225 to protect against any unexpected price recovery. The target price should be set at 18 cents, slightly above the support level, allowing you to take profits before the market hits major support. This strategy aims to minimize risk while taking advantage of the bearish outlook for Solana name service in the short term. Based on the provided data for Aave, a cautious investment strategy focusing on the short term seems most appropriate. The 2-week price history reveals a downward trend, and the forecast predicts further declines. While the support price is at $138.41, the current price is significantly higher, indicating a potential for a correction. Considering the risk involved, a short position is recommended to capitalize on this anticipated decline. To execute this strategy, an entry price of $170 would be suitable, aligning with the forecast and allowing for a potential price drop. The stop loss should be set at $172 to limit potential losses if the price unexpectedly rises. The target price could be set at $160, aiming to capture a significant portion of the projected decline while remaining mindful of potential market volatility. This approach allows for a measured risk-reward profile, aiming to profit from the anticipated short-term correction in Aave. Given the historical price data for Injective, showing a fluctuating trend with a slight upward bias, and the forecast indicating a continuation of this upward movement, a long-term investment strategy appears promising. The support price of $22.44 suggests a potential floor for the price, while the resistance price of $25.84 indicates a ceiling for the short term. To capitalize on this potential, an entry price around $23.50, slightly above the current price and below the resistance level, would be suitable. A stop-loss order placed at $22.50 would help mitigate potential losses if the price drops below the support level. The target price should be set at $26, aiming to capture a significant portion of the potential upside movement predicted by the forecast. This strategy focuses on a long-term perspective, allowing the investment to grow over time as Injective potentially climbs towards its resistance level. By carefully managing risk through the stop-loss order and aiming for a conservative yet substantial target price, this approach seeks to achieve attractive returns while minimizing potential downside. Based on the provided Polygon price history and forecast, a medium-term investment strategy appears most suitable. The historical data shows a fluctuating trend with periods of both upward and downward movement. The forecast suggests a continued upward trajectory, with prices potentially reaching $0.461 in the coming week. This indicates a bullish outlook for Polygon in the short to medium term. Considering this, a long position would be recommended. A conservative entry price could be set at $0.4276, aligning with the support price. A stop-loss order should be placed at $0.406 to limit potential losses if the price reverses. The target price could be set at $0.4585, the resistance level, aiming to capture the anticipated upward movement. This strategy allows for potential profit while managing risk through a defined stop-loss order.